What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets, DeFi tutorials on how you can earn some nice staking yield on your crypto holdings, as well as deep dives on projects we see as having huge potential for the future. Now, as always, please remember that nothing on this channel is financial advice, rather my own thoughts, opinions, and research that have been compiled and broken down for viewer education and entertainment purposes only. I love and appreciate you all. Please invest responsibly. Now, if you have not yet hit that sub and like button, please consider doing so. It costs you guys nothing and it does mean a whole lot to me. And follow us on Twitter and join the Telegram channel. Both links will be in the description down below. Now, with that said, we're going to get right into today's content. And what we are talking about today is Mmfinance. We have not done an update on Mmfinance in a couple of weeks, and I do think that it is very important to go ahead and look at it, as this was formerly the #1 DEX on the Cronos chain. And although it has fallen out of that #1 spot, it does still act as a huge growth driver for the total value locked on Cronos, which is obviously integral to us climbing up these ranks and getting that top 3 amongst all blockchains that we are looking for. So if we actually take a look at MMF here, you can see that it has had a rough couple of months here, from April 9th, peaking at about 1.3 billion in total value locked, all the way down now to 120 mil. And the price definitely reflects this steep drop off in the TVL. As you can see here, in April, Mmfinance hit all-time highs of about $1.80 per coin, and we are now sitting at 3 cents per coin. So, I mean, this is definitely a function of the bear market. It does tend to be really, really harsh on these projects. However, Mmfinance has, undeniably been devastated, more than the majority of other altcoins. And there is actually a material reason for this. It is not just because of the bear market, but also because of some poor decisions that Mmfinance has been making, in my personal opinion. And we're going to kind of break down what exactly these decisions are and how I think that Mmfinance can potentially pave their way back to becoming the #1 DEX on the Cronos chain and putting some respect behind this DEX again. And in my opinion, all of the issues here actually do surround this MUSD, which was intended to be the next frontier stablecoin for Mmfinance and the Cronos chain as a whole. So just a quick recap on what MUSD is. It is a stablecoin aiming to be the first and largest stablecoin on Cronos chain that is native to the ecosystem. And in doing so, Mmfinance and its ecosystem assets would be placed as the centerpiece of Cronos, where builders were built upon Mmfinance and users will see MMF as the leading ecosystem on Cronos. Now, to achieve this, MUSD token had been planned to adopt 2 main stabilizing mechanisms, and I think you guys might know where this is going. But for starters here, they had the over-collateralized issuance of MUSD tokens via the MMF.money platform. They took interest-bearing tokens as collateral and issued out MUSD at 90% LTV. And the main stabilizing aspect for the implementation was to present arbitrage opportunities when those who owe debt are incentivized to repay their debt by purchasing MUSD when MUSD is slightly cheaper than $1. The MUSD token will adopt a fractionalized minting system that accepts USDC and MMF tokens as collateral, and the fractionalized minting system will start off at 100% collateralization ratio, which means it will be fully backed by 100% stablecoins initially before the algorithm kicks into motion to allow for lower CR, thus locking in more MMF tokens out of circulation. So the current situation as of May was that the team had already launched phase 1 of their developments for the MUSD token, with already over 10 million MUSD tokens out in circulation, backed by interest-bearing tokens, and the MUSD that had been issued was currently earning revenue for the platform in the form of interest tokens. They did begin the initiation of phase 2, where they supplied MUSD, USDC, USDT, and DAI liquidity for the MUSD token, claiming they now had over 45 mil MUSD to 3mm liquidity that would serve as backing for the MUSD token. And out of the 45 mil liquidity, there was an estimated 22.5 mil in stablecoins that served as the backing. So about half of this 45 mil was actually backed purely by stablecoins. And they said that once the audit for the fractionalized treasury was completed, all stablecoin backing would be moved into the smart contract treasury, so that should MUSD ever fall below peg, redemptions against the treasury can be done to allow for arbitraging to once again bring the price of MUSD back up to peg. Now, if this sounds familiar, it should, because we have definitely had a pretty rough time for algorithmically pegged stablecoins as of late. And that's why they did announce on May 12th, just 3 days after this initial article, that they did kind of address the Luna and UST saga with the depegged UST. They talk here about how the crypto bear market has just been absolutely brutal, and they are not wrong about that whatsoever. Now, what they said is, with the macro assessment out of the way, they wanted to share their updated plans regarding MUSD, as the Luna and UST saga has definitely shaken investors' confidence in stablecoins and how they are perceived. The only stablecoins that have largely maintained peg are the over-collateralized ones, not the algorithmically pegged stablecoins. In fact, I don't know why people keep trying to do algorithmically pegged stablecoins when they clearly do not work. And this is why their team put a pause on plans for a fractionalized stablecoins, even though they are certain that a hybrid CDP and fractionalized approach will guarantee a strong peg. They are also aware that it is impossible for their team to combat the current ill sentiment towards stablecoins that seemingly take in magic money as backing. And I mean, understandably so, because realistically, that is what it is. So here they actually went ahead at the end of the month and just completely halted plans for MUSD in the market downturn. They said fear of the stablecoins of depegging has prompted a huge outflow of capital from DeFi, and overall DeFi TVL has halved from nearly a month ago. However, as the dust settles around all the noise, with USDT steadily regaining and maintaining its peg, they do expect to see a flow of capital back into DeFi. They did previously outline plans for their fractionalized MUSD stablecoin, which they did really envision to be the first and kind of like the epicenter of the Cronos chain. However, clearly things did not work out in their favor, and this is where things actually started to get really bad for MMF, in my opinion. So on June 1st, that was actually a pretty eventful day in terms of news for MMF, as they did actually release an article here saying, green candles, where art thou? And that's a good question. I mean, if you look at the price of MMF, like, they just have had a really hard time even having one green day here, right? And the thing is, in these bear markets, you can have these nice rallies, like a nice 50-40% rally. You can see here we came all the way back from like 28 cents all the way up to 56 cents. So we saw almost 100% rally here on MMF. But then just as quickly, we not only retested these lows at 28 cents, but we broke right below them. And again, I mean, we're currently sitting at 3 cents. So I think what they did here was really just try to make an article to really beef up investor confidence. And they said here that they are working on some big updates like MMA equipment minting, launch of an MMA game, UI improvements, protocol parameter tweaks, stronger integration and collaboration with other DeFi projects, better UX, faster loading speed and indexing, and more. And then we actually saw a post from this person on Reddit. Now, this post is very interesting, as it does actually highlight a key weakness of the MUSD stablecoin plan. And there is definitely a lot of DeFi technical jargon that if you are not too familiar with DeFi protocols or dApps, you might not understand some of this. So I'm going to try and break it down as simply as I can. So you need to understand two things when it comes to MUSD. First is it is over collateralized. In order to be minted, you have to put some collateral, which in our case can be either USDC or USDT, which are the interest-bearing tokens on Tectonic. MUSD can still lose peg due to two possible causes right now. The first one is when someone borrows it and swaps it for another token. And secondly, when someone borrows MUSD and pairs it, for example, to CRO or MMF, but these two tokens lose value. So basically what he's saying here is that when two of these things happen, there's a possibility for anyone to buy MUSD at a discount, since it would eventually go back to $1. And who guarantees that this will happen? The borrower, the person that has lost those MUSD and has to pay them back. So let's just imagine someone borrows 1 mil MUSD and he loses them because he either sells them or occurs an impermanent loss. Now pretend that person loses access to their wallet, which I hope never ever happens to anybody. Well, you know how often it happens. What is going to happen next? So in the case of MUSD, there is still a stability fee. In fact, your depth of this fee increases by 0.5% yearly, and the same thing, you would eventually get liquidated. But MUSD uses interest-bearing tokens like the TUSDC and USDT, and until Tectonic does the job, they will always increase at a value way higher than the MUSD stability fee. So if we consider that TUSDC and TUSDT will keep indefinitely growing at a rate higher than the stability fee, then we can say that for every MUSD loss by one of the two above cases, we don't have a back in the case that the borrower for any reason loses access to their wallet, or simply for any reason that they don't want to pay back the loan, even if it is in their best interest. He says here that he knows this may sound dumb, but he still cannot, 100% guarantee that the stablecoin will remain backed. And just to make it clear, this was an analysis of a critical point in the MUSD mechanics. I think the team should find a solution if they really want to compete in the stablecoins world. Now, this post was made on June 12th, and it did not really receive too much attention. There were a couple of comments and a couple of upvotes here. However, he was right on the money. And while this may not be the reason why it actually did crater, you're going to notice here that on the very same day that he made this post, we were sitting at pretty much 99 cents. And then boom, by June 4th, we really started to sort of teeter to the downside. And by June 10th, we came all the way down to 93 cents. So effectively, MUSD did lose its peg by about 8% in the matter of, let's say, 5 trading days, give or take. Now, since then, we have come back up to that 95 cent level. However, we are effectively still 5% below the peg here. And I do, once again, attribute this to being a very big reason that a lot of money has left MMF. I do think that given the current environment, and especially what happened with this whole Luna situation, that yes, people are particularly wary of stablecoins. And if you are going to launch a stablecoin on your platform that does actually prove to not be stable, that it will shake investor confidence, and a lot of people will run and not look back given how much money was lost recently due to the whole UST collapse. So, I mean, if we look here at Mmfinance, once again, I definitely think that this whole stablecoin depegging incident does attribute to the drop-off in TVL. And listen, this only happened on the 10th, right? Like, this didn't happen that long ago. I mean, the big crater happened on the 10th, but we started cratering here around the 6th of June. So if we actually go to the 6th of June on DeFi Llama, you're going to notice here that we were still at 164 million, and we saw another steep drop off in TVL down to about 120 mil. So we saw like another 25% drop off in TVL as soon as the stablecoin depegging occurred. Now, what is the road for MMF? How do they get back on track here? Once again, I do really think that first of all, they need to really iron out the plans for the stablecoin to ensure that it is actually stable. And maybe they need to consider moving it to being 100% backed by US dollars as opposed to this algorithmically pegged stablecoin. I don't really see the attraction and why everyone wants to do this algorithmically pegged stablecoin when clearly they have not worked out in the past. And I do believe that moving forward, people will be a lot less trusting of algorithmically pegged stablecoins, as really USDC and USDT are the only stablecoins for the most part that have held up well in this market environment with the whole UST collapse. And those are both backed by actual physical dollars. Well, they're supposed to be. That's to be determined. But I think it's important to note here that, listen, guys, I'm rooting for MMF, okay? I want MMF to thrive. I would love to see MUSD become like the epicenter stablecoin of the Cronos chain. I think that would drive a lot of TVL and just really open up the broader DeFi applications that can happen on the Cronos chain. And I do think that MMF is well positioned to be at the forefront of this. And keep in mind here that there's such a new project. Like, they really only launched in like early December. So this project is still in its infancy stages, just like the Cronos chain itself. And I do think that the team is learning as they go. I do think that they already have learned a lot just based on this steep drop off. And as I have said multiple times, I am a true believer that bear markets are healthy. I know people are angry. I know people are upset. And especially if you have been an MMF from the very beginning, I know that you are, you're hurting. You're down quite a bit. But guess what, guys? Everyone is, okay? You are not alone. And bear markets, in my opinion, the one positive you can take from the bear market, well, the two. The first one is you get to pick up good projects at cheap prices. But secondly, you really get to thin the herd from these projects here that are simply building off hype, that are just hard forks of other projects with no actual innovation themselves. And you get to wean those out of the crowd, and you only end up with the projects that are strong. Only the strongest survive, especially in a crypto winter. And I think this will be a very pivotal moment for MMF to prove what they are made of. So on that note, I hope you guys did enjoy this content. I hope if you were wondering what happened with MMF, that this did shed a little more light on the whole situation. There was some other issues that MMF we're having really leading up to this steep drop off in TVL. We have covered them in previous videos, but I really do think that this complete collapse of the MUSD stablecoin was sort of the last straw. So I will catch you guys in a future video. The next video, we're going to start a 5-part series all about CRO Coin. I'm really looking forward to getting that out to you guys, and I hope you enjoy your Monday. Peace out for now.